You know, it's quite funny. Everyone seems to think that institutions that are managing trillions and trillions and trillions of dollars are basically going to wake up one day and go, hey, we should probably get into Bitcoin. Like these signals have not been around for years up until this point. And I wanna just recap something that I want everyone to understand, that the breadcrumbs have been being laid here for years now. I don't want anyone to sit here with an excuse going, oh my God, this just blindsided me and I wasn't aware that this was going to happen. All of everything I'm saying today, I've been saying for 2 years, and I want to prove that because I think it's important to understand that money leaves clues. There is a process to how capital moves, and if you understand that process, then you'll be able to take advantage of it. But most people have got their heads so far stuck up their $10 a month doom and gloom boomer behinds that they can't get their head around what's actually happening here. And again, everyone knows my history. I was a gold guy for a very, very long period of time, helped people own gold in the smartest way possible for gold ownership, in my opinion. And yeah, at the end of the day, I pivoted from gold into Bitcoin because the information changed, right? So I want to point out this interview that I did in 2021 at this point. This is 2 years old, this interview. And I want you to hear exactly the conversation that myself and Oliver Velez, who has 317,000 subscribers at this point, who is also a trader, also his background in traditional markets, brought me onto his podcast after I believe he saw me on Dennis Porter's podcast. I only did like 2 or 3 podcasts at this point 2 years ago. By the way, at this point, no one knew who I was. No one knew my face. No one knew my background. No one knew anything. The only thing that people were doing is listening to my perspective on Bitcoin and what perspective I had on Bitcoin. So I want to just basically play like 4 minutes of this interview and talk through every stage of why I said what I said 2 years ago. I think this is extremely important because all of these messages that have been coming out are leaving clues. And if you're not sitting here paying attention to what the fuck is going on, you're going to be completely railroaded by the system, which is what's about to happen to most people as soon as this ETF comes out. So we're going to go through each of this, I'm going to hit play, hit pause, talk through exactly what I said, why I said at this time. Bear in mind, no one knew who I was at this point. Right? I wasn't out there as British HODL. In fact, this video recording shows that because all you can see is the image that I had, the old image that I had of the very first British HODL image that I had up there. And again, this is why I want you to subscribe to this channel, because the faster you subscribe, the faster this message is not missed. How many people do you think, when I was talking about this and trying to explain this 2 years ago, how many people have missed the opportunity to actually understand this? That's why I started this YouTube channel, because I was telling this to my parents. I was telling this to my friends, to the people that I love and care about, right? They all understood when I pivoted to Bitcoin, why I pivoted to Bitcoin. And then, you know, obviously this year I decided to actually turn it and put the information public. So please subscribe. It's extremely important. And let's get to this video. I'm going to start in the section where we're talking about gold versus Bitcoin.
It did not respond even remotely close to something like how Bitcoin responded was really the final nail in the coffin for me. That if everything that for the last 40 years, every gold bug has been preaching about, if everything that they have been warning about has occurred all together in 1 year.
This is obviously all of us talking about 2020, right? We had the world shut down. We had the unlimited amount of money printing happen at the same time. 50% of US dollars are printed in an 50% of all US dollars in existence printed within an 18-month to 2-year window. And guess what happened to gold? Absolutely nothing. And this is why I pivoted out of my gold position, started when I started buying Bitcoin, and pivoted out completely by November of 2020.
And gold didn't budge.
Gold didn't move. Yeah, it went up to 2000, and again, it just proved itself to be an impotent asset. And nobody wants to speak to their gold advisor about this because they feel so emotionally attached to the gold. But this is what was actually happening real time 2 years ago.
Finished for me. It's finished.
I believe in following the money, right? Like, as much as I loved gold for a decade, I believe in following the money. And the one moment for me that did it was I saw the CIO of Blackrock.
This is extremely important. Everyone thinks BlackRock just came out. Larry Fink is now just talking about this, etc., etc. This was 2 years ago that this was on CNBC.
Go on CNBC, and for the first time ever, I heard somebody on CNBC at that level say Bitcoin is gold 2.0. And then I saw 17 days of consecutive outflows from GLD.
So let's talk about exactly what I just said there. The CIO of BlackRock 2 years ago went on CNBC and said Bitcoin is gold 2.0. Bitcoin has started talking about this, but most people didn't really pay attention to this because Bitcoin was trending downwards, right? But then what happened? When you looked at the GLD, the gold ETF, the gold ETF that I was using, that I was invested in, you saw 17 days of consistent outflows, and they were very, very significant. And that was an absolute sign at that moment in time.
And I thought, I don't care what the price says, the money's going, so I'm out.
Yeah, that's right.
So you got to follow the money, right? Wherever the money starts moving, that's where the value is going to be, because the money, the smart money is never wrong, right? The smart money is going to move the market. And so that's what was going on here. The CIO of BlackRock went on CNBC and said Bitcoin is gold 2.0, 17 days worth of consecutive outflows, while your doom and gloom boomer gold bugs are telling you need to pile into gold as much as possible.
Yes. That's interesting. What I've been telling my Bitcoiners here is that, gold currently, I think, is at $11.5, $11.6 trillion, but that is largely made up of two components. There's about $4.5, maybe $5 trillion of that total number is utility. So,
Gold's market cap is not just based on true value of gold, right? Any asset like real estate. If you took out the monetary premium of real estate, people investing in real estate to save, to invest for the future, etc., and just reduced it down to the utility value, the living in its value, the price of real estate will be much lower at this point, which is the crisis that governments are facing. It's the same thing for gold. Gold has got a utility value, like the jewelry or whatever, if you want to put gold on glasses or whatever else, and then it's got the actual investment value, the premium that people are paying to invest and save in it.
Used in certain as components in certain things in the world, but largely jewelry use, and the rest of that value is a monetary premium because historically it's been used as a store of value. I believe that over time that monetary premium gets sucked out of gold and actually finds its way into other assets, the biggest one obviously, or the closest one, being gold 2.0 or Bitcoin.
See, the reason why gold hasn't done what the doom and gloom boomers want it to do and have the big wet dream that even I thought it was going to have is because other things have a better monetary premium than gold, and therefore the price, a monetary premium, number one, and number two, scarcity than gold, and therefore the value goes into those assets. The monetary premium goes into those assets more than it does go into gold. And so the higher the scarcity and the higher the perceived monetary premium, the more money is going to go into it. And obviously, real estate has a higher scarcity than gold, but Bitcoin's going to have a higher scarcity than real estate based on the stock to flow ratio in this next cycle, after this next halving.
There's, in my opinion, about a $5.5, almost $6 trillion that ultimately will be pointed somewhere else, and I think a big portion.
So what Oliver's talking about here is the complete demonetization of gold's monetary premium. Now, do I think that's going to happen? No, I don't, because there's always going to be some people that, want gold and think it's a good savings tool and et cetera, right? Even though it's going against all the data, even though every news report or every study that you read done on investment accounts showing us that gold is being demonetized by the next generation. Any wealth that gets passed over, the gold position is reduced first in the portfolio by the heirs of the holding. So gold is being destroyed before our very eyes as a monetary, as a tool for monetary saving and monetary premium, but people keep believing in it. But I believe exactly what Oliver's saying, in that it is going to see a reduction in monetary premium. Is it going to be completely eradicated? I don't think so.
That does find its way in Bitcoin, and like you said, I mean, the outflows began We started to see the outflows out of these gold funds begin 18 months ago, 12 to 18 months ago. So anyway, that's my view. That's what I've been telling my followers.
Yeah, I agree. And the crazy thing about it is that Bank of America released a...
So everyone goes on about this Bank of America report. I'm the guy that's basically managed to get everybody to start talking about the bull market multiple. Everyone had their heads up their asses talking about the fact that it was 3-to-1 like a bond, right? And let's forget the 3-to-1, otherwise I'm going to get really pissed off, right? Everyone's been wasting everyone's time telling everyone, oh, you can just take your time, DCA, $10 a month DCA gang, etc., because it's just a 3-to-1 multiple. Absolute horseshit. And now it's being proven. And I was saying this 2 years ago when no one knew who the hell I was.
Last time during the peak in earlier this year, and they said that to move the price of Bitcoin by 1%, you needed about $93 million. So let's just round it up to $100 million, right? That was at a $1.1 trillion market cap, which means $100 million would move the price up by $11 billion. That's a 1 to 100 effect on the market cap. So $1 into Bitcoin increases the overall price of the market cap by $100. That's we've never ever seen.
We've never had an asset like that. Absolutely.
Never like that. So what that tells me is that, $1 trillion.
So if you believe that gold's monetary premium can be demonetized by just $1 trillion, not the $6 trillion that Oliver was suggesting in that interview, which is the monetary premium of gold, maybe even slightly higher now, it could be $7 trillion. If you think $1 trillion of just monetary premium can come out of it without reducing its utility value, you're talking about a $5 million Bitcoin. And this was clear 2 years ago based on what Blackrock was saying, what Bank of America was saying, what everyone was saying. You just had to have the balls and the understanding to go, this is what they actually mean and this is what's coming in the future.
If that's true, just $1 trillion going into Bitcoin could move the market cap.
And by the way, if you think that's a bunch of bullshit, just go look at the data around when the fake ETF tweet was spilled by Cointelegraph. It was like a few $100 million of injected capital in 30 minutes moved the market cap of Bitcoin up by $67 billion. So the multiplier, the bull market multiplier is exactly what I've been saying it is from 2 years ago, and now it's being proven and everyone's starting to pay attention to it, finally.
To $100 trillion, which means that's a $5 million Bitcoin approximately. That's insane.
That is insane. And of course, we know that Bitcoin is insane almost on every level. But wow, that's incredible. Yep. So you said your epiphany came by reading the Bitcoin Standard. At how much time did it take?
And again, I've been telling people this for 2 years. Go read the Bitcoin Standard. In fact, if you knew me from Clubhouse, which is where I was being anonymous trying to talk about this at the beginning, in my bio, it says, if you haven't read the Bitcoin Standard, shut the fuck up.
You from your epiphany, your aha moment to actually purchasing Bitcoin or transferring fiat for Bitcoin, I should say.
This is a funny story. So I was walking around my local park in the springtime listening to...
And this story is relevant because I want you to understand how fast capital can move and why I've been trying to drum in the level of urgency over the last 4 or 5 months that I've been focused on doing this on YouTube, and why I've been asking you to subscribe, why I've been asking you to share the videos, why I've been begging you to get to 1 Bitcoin, because this is how fast shit can move. This is why I want you to hear this story.
Book. And once the penny dropped, I remember I can feel it right now in my body. I just stopped where I was in the park. And I was like, I have completely misunderstood this asset. I did a turnaround and I started walking home. While I was walking home, I downloaded the Coinbase app on my phone, and I had already had a Coinbase account. I logged in. I wired 50,000 pounds from my bank account to Coinbase and bought 50,000 pounds worth of Bitcoin by the time I got home.
That's how fast, once the penny drops, that's how fast capital can start moving. That's just one person transferring that amount of money and acquiring Bitcoin. This was, by the way, so if this interview was 2 years ago, I'm talking about March, April of 2020 when I did that. What do you think happens when it's on CNBC, Bloomberg, Blackrock's calling you, Fidelity's calling you, Grayscale's calling you, the adverts are everywhere? What do you think's going to happen to the damn panic?
Wow. Wow.
So pretty quick.
I love it. Pretty quick. That's pretty quick before you got home. I love it. I love it. Yeah. And so are you one of those buy it once kind of Bitcoiners and just let it rock, or are you a constant perpetual buyer?
Well, I mean, I have businesses and I have cash flows coming in as well. So, obviously I'm buying consistently. But to me, the argument of do I dollar cost average, DCA, or just smash buy, at this point with this asset, you've got a 93% hodl rate, which means
this was in obviously 2021, right? So this was the year that Bitcoin is going up and moving up. There was a 93% hodl rate during a retail run. Imagine what happens during an institutional run.
3% of all the Bitcoins that are available are not moving, right? Not only that, you've now got a spot, a futures ETF in the US. You've got a spot ETF on the way at some point.
I don't know how else to read this to you, right? This game has been.
You've got institutions looking at buying, which I don't think they're ready just yet, but there's murmurings of that. You've got so much demand coming for this asset that instead of DCAing, what you should be doing is spending all day and all night for the next 3 days to understand this asset and understand what it is and get an allocation. You can always DCA onwards with your paycheck or whatever, but you've got to. Right now is the time for you to understand what this asset is really quickly. And it's not just a trade. You've got to understand the asset and understand what it is long term to secure your core position and then do whatever you want to do. I'm still involved in public.
Right? So at the end of the day, here's what my message has been forever. Get to 1 Bitcoin because time is running out. I told you the ETF is going to come. I told you that they're going to start advertising this thing. I told you that they're going to start selling it to their institutional clients. Like, this game has been laid out for years. This is not a new game. And I wanted to point this out because obviously, as you can see, this interview was released 2 years ago when no one knew who the hell I was. No one knew what this was about. No one knew who was behind this British HODL moniker, etc., etc., etc. But I wanted to do this video today as we approach the end of the year because a lot of people are wondering, why do I keep banging people over the head about this? None of this is new. I've been saying the exact same thing since 2020 when I jumped onto Clubhouse and Twitter, and the message is not changing. The urgency of getting to 1 Bitcoin is higher than ever now because everything that I said in this interview, which I urge you to go watch, I'll post the link in the description of this video, go watch the whole thing from 2 years ago. The urgency has only gotten worse. It has not gotten better. And if you're sitting there going, hey, I have time, you're severely mistaken because the game plan has been laid out for years. This is not new. Smart money, institutional capital doesn't move slow. I mean, it doesn't move fast. It moves extremely slowly. So when certain things started happening, I could tell what was going to come. And everyone keeps saying, oh, how did you know this was going to happen? Because I have the common sense and the understanding to go, if they're saying this today, this is what they're going to say in 2 years, and I can extrapolate out, and that's exactly what's happened. So this is getting even more serious than you think. Again, please get to 1 Bitcoin. Please share this video. Please subscribe to the channel because we have to get the message out because time is running out and you will be priced out of Bitcoin. And go watch the video that I released yesterday about how Bitcoin keeps pricing people out. But ultimately, whether you heard me 2 years ago, whether you hear me now, whether you hear me in 2 years' time, regardless of the price of Bitcoin, there are always only 3 rules to Bitcoin. Step number 1, you buy Bitcoin. Step number 2, shut the fuck up. And step number 3, you get fabulously wealthy.